All right, so you're thinking about investing in this Deepak Builders IPO, huh?
Smart move. Construction and infrastructure in India. The potential is huge, but
But before you go throwing your money at it, we got to do our due diligence, right?
absolutely. Time for a deep dive into their prospectus. We've got the financials, industry overviews, risk
The
factors.
whole 9 yards.
Exactly. Consider this your backstage pass to their business plan.
Cool. So who are these Deepak Builders folks? Just another construction company.
Not exactly. They've got a pretty sweet niche in northern India.
Okay, like what?
Some impressive projects, railway bridges, hospitals, even historical memorials.
Oh, wow. Like what?
Like the Janggi Azadi Memorial. We're talking serious infrastructure here.
Janggi Azani Memorial? Yeah, I've heard of that. Pretty big deal.
Hmm.
But sounds like they're kind of focused on just northern India, huh?
Yeah, for now they're sticking to their stronghold in the north. But the prospectus does hint at ambitions to expand. Makes sense, considering the growth potential across all of India.
For sure. Okay, so they've got the experience, the ambition.
Yeah.
But who are they actually building all this stuff for?
Ah, good question. Their client base is mostly government and semi-government entities.
You mean like,
Think government agencies, public sector undertakings, that kind of thing.
interesting. Is that a good thing? I mean, government contracts sound pretty stable, right?
True, a steady revenue stream is definitely a plus.
But
But there's always a flip side. What happens if the government's priorities change? Or if they slash budgets? Always something to consider.
makes sense. Okay, so before we get too deep into the what ifs, let's see what their financials are actually telling us. Now, they've provided this restated financial information. What's that all about? Some kind of accounting trickery?
Haha, not quite trickery, more like a language adjustment. They're restating past financials to line up with current accounting standards.
So like making sure we're comparing apples to apples when we look at the numbers.
Exactly. Transparency is key.
Okay, got it. So let's talk money. Revenue and profit.
Mm.
Are they actually, making money?
The good news is their revenue has been climbing steadily over the past 3 years. We're talking a nearly 20% jump in fiscal year 2023 compared to the year before. Shows they're winning contracts and getting things done.
That's a good sign. But revenue's only part of the story, right? What about their profit margin? Are they actually making a decent profit from these projects?
So their EBITDA margin, which basically tells us their profit before all the financial stuff, sits around 12–13%.
Is that good?
It's decent, but we'll
Right.
need to see how that stacks up against their competitors.
Makes sense. All right, so who are the brains behind all this? Who's running the show at Deepak Builders?
Well, the managing director, Deepak Kumar Singhal, has been in the game for over 30 years.
Wow.
Yeah.
He's probably seen it all. What about the rest of the team? Anyone else we should know about?
Yeah, they've got a solid board of directors. Finance, law, engineering, a pretty well-rounded team on paper. But we'll have to dig a little deeper into their track records to see if they're the real deal.
Yeah, titles don't always mean everything. So assuming everything goes smoothly and Deepak Builders goes public, what are they planning to do with all that IPO cash?
Well, they've outlined some key objectives. First, they're looking to pay off some debt.
Makes sense. How much are we talking?
Up to $300.00 million. Pretty standard move in IPOs. Shows they're trying to strengthen their financial position.
Right, like cleaning house before the guests arrive.
Exactly. Then they've allocated up to $950.00 million for working capital.
Ah, the fuel that keeps the engine running. Especially important in a fast-paced industry like construction.
Right. And then there's that general corporate purposes allocation.
That sounds kind of vague.
A little bit, yeah. But it gives them some flexibility, maybe invest in new equipment, explore new markets.
All right, fair enough. So, experience, solid team, plans for the future. But we got to be realistic here. Every investment has risks. What are the potential pitfalls we should be aware of?
They're pretty upfront about the risks in their prospectus. One of the big ones is their revenue concentration.
Right, that reliance on a few key clients,
Right.
especially government entities.
Exactly. If they lose a big contract or government priorities shift, it could hit their bottom line pretty hard.
Yeah, makes sense.
Yeah.
Any other red flags?
Competition. Construction and infrastructure in India is super competitive.
I can imagine.
They're going up against some big players with deep pockets. Deepak Builders will have to be smart and leverage their niche to stay ahead.
Survival of the fittest. Okay, before we get too bogged down in the risks, let's talk valuation. Are they asking investors to pay a fair price for a piece of the action?
That's the million-dollar question. They've actually included a competitor analysis.
Now that's helpful.
Yeah, comparing themselves to companies like ITD Cementation Limited, Alawalia Contracts, PSP Projects Limited.
Okay, so we can use those as benchmarks, see how Deepak Builders stacks up.
Exactly. Time to do some homework, comparing those financial ratios, figuring out if we're looking at a bargain or a potential bust.
Right. Now, before we get lost in the spreadsheets, who owns what at Deepak Builders?
It's a bit of a family affair right now. The majority stake is held by the promoters, Deepak Kumar Singhal and Sunita Singhal.
The managing director and...
His wife. Deepak himself owns around 88.92%.
Wow, that's a lot of control. So how will the IPO change things? Will he still be calling all the shots?
The IPO will dilute their ownership a bit. Offering shares to the public always does. We'll get into the specifics later, but it's important to think about how that shift in ownership could impact the company's dynamics.
Right, bringing in new shareholders can definitely shake things up. Speaking of potential shakeups, we got to talk about those related party transactions.
Ah, yes. Those always make investors a little nervous.
For good reason. So what are they all about?
Basically, transactions between the company and, well, anyone connected to it. Promoters, family members.
Things like it.
Lease agreements, business acquisitions, that kind of thing.
Okay, so why should investors care about these behind-the-scenes dealings? What are the red flags?
It's all about transparency and fairness. Are these transactions happening at arm's length? Meaning, are they comparable to what would happen in the open market, no special favors, or are they potentially benefiting those connected to the company at the expense of other shareholders?
Right, got to make sure everyone's playing by the rules. So Deepak Builders has disclosed these related party transactions in their prospectus, right?
They have,
Oh, yeah.
and anything fishy.
Well, there are a few transactions that definitely warrant a closer look, particularly those involving the promoters, lease agreements for office space, acquisitions from companies they previously owned, even some loans they've provided.
Okay, so we've got some more digging to do, making sure everything's on the up and up. But for those investors already itching to buy, what's the IPO timeline? When can they get in on the action?
The prospectus has all the key dates. Anchor investor bidding date is 1 working day before the offer opening date. Then we've got the offer opening and closing dates, then the share allotment date, and finally, the big listing day. Time to mark those calendars. But before we get ahead of ourselves, remember, this deep dive is just the starting point. Do your own research, weigh the risks and rewards, and make the decision that's right for you.
Couldn't have said it better myself. Informed decisions are the best decisions. We've given you the tools. Now it's time to put them to work. Welcome back to our deep dive into the Deepak Builders IPO.
All right, so last time we got a pretty good overview of the company, their plans.
Their ambitions.
Exactly.
Yeah.
But now it's time to really roll up our sleeves and dig into those financials, wouldn't you say?
Absolutely. Let's grab our calculators, put on our accounting hats, and dive right into the profit and loss statement.
A P&L.
Yeah, the P&L. It basically tells us how much revenue they're bringing in, what their expenses are.
And ultimately how much profit they're making, the bottom line.
Exactly. And Deepak Builders P&L, it reveals some interesting trends. Remember that revenue growth we talked about? Well, it's been climbing steadily for the past 3 years. They even had a significant jump in fiscal year 2023.
Yeah, that's a great sign. Winning contracts, staying busy.
Okay.
But revenue is only half the story, right? What about their profitability? Are they actually making a decent profit on these projects?
That's where it gets a little more nuanced.
Uh-oh.
Their gross profit margin, so basically the profit they make after deducting the direct costs of construction, it has fluctuated a bit.
Okay.
In fiscal year 2023, it was around 17.82%.
So a little lower than the previous year. Could that be a red flag? What could be causing that?
It could be a sign of pressure on their margins, maybe due to rising input costs, steel, cement, labor, or maybe they're facing stiffer competition.
So having to bid lower to win projects.
Yeah, exactly. It's something to watch out for.
Definitely something to keep an eye on. Okay, so we're seeing some potential challenges with profitability. What about their EBITDA? That's always a good indicator of a company's operating efficiency, right?
Right. EBITDA helps us see their core profitability, stripping away things like interest and taxes. In fiscal year 2023, their EBITDA margin was around 12.20%.
Not bad.
Not bad, but context is everything. We'll have to compare this to industry averages and their competitors, see how they really measure up.
Okay, makes sense. So we've explored the P&L, gotten the sense of their revenue, expenses, and profits. Now let's move on to the balance sheet. What does that tell us about Deepak Builders' financial health?
Think of the balance sheet as a snapshot, a picture of their assets and liabilities at a specific moment in time. It shows us their financial stability, how they manage their debt.
Debt. Always a hot topic for investors. How much debt are they carrying? Is it manageable?
Well, their balance sheet does show a significant amount of debt, mostly in the form of borrowings from banks and financial institutions.
Okay, well, debt isn't always a bad thing, right?
Right. Companies use debt to finance growth all the time. The important thing is whether they can manage it effectively.
So how do we know if they can?
One way is by looking at their debt-to-equity ratio. It basically compares their total debt to the amount of equity they have.
So high debt-to-equity ratio.
Not necessarily, but it's something to watch out for. We'll dive into that ratio later and see if their debt levels are a risk to investors.
Sounds like some serious number crunching ahead. But before we get lost in the ratios, let's talk about cash flow. It's great to have profits on paper, but are they actually generating cash from their operations?
That's where the cash flow statement comes in. And the good news is, Deepak Builders' cash flow statement shows they have been generating positive cash flow from operations.
That's a good thing. Right?
Very good sign. It means they're not just relying on external financing. They're bringing in cash from their core business activities, actually building those bridges and hospitals.
So they're not just playing accounting games, they're actually making money.
Exactly. Positive cash flow gives them more flexibility to reinvest in the business, pay down that debt, maybe even distribute dividends.
Ooh, dividends. Okay, before we start celebrating, let's focus on some key financial ratios that can help us understand these numbers a little better. Ratios can be intimidating, but they're like, little clues, right?
Exactly, like financial fingerprints. And they can reveal a lot about a company's health.
All right, so give us the rundown. What are these ratios telling us about Deepak Builders?
Well, things like return on equity, ROE, return on capital employed, ROCE, these give us insights into their profitability and efficiency.
Okay, and what about their short-term liquidity? Can they pay their bills?
For that, we look at the current ratio. It tells us if they have enough liquid assets to cover their short-term obligations.
Okay, so let's break these ratios down one by one, starting with ROE. What's the story there?
ROE measures how well they're using shareholder capital to generate profits. So how much profit for every rupee invested by shareholders. Deepak Builders' ROE has been fluctuating, but it's still relatively healthy. Indicates they're generating decent returns.
Always a good sign. Now, what about their ROCE?
Similar to ROE, but it takes into account both debt and equity. Gives us a bigger picture of how efficiently they're using their capital. Well, their ROCE has also been fluctuating, but it's generally above industry averages. Suggests they're using their capital efficiently to generate profit. But remember, consistency is key. We want to see that trend continue, especially with all that debt they're carrying.
Okay, so they're doing well on the profitability and efficiency front. But what about that short-term liquidity? Can they pay their bills?
That's where the current ratio comes in. And their current ratio, it's fluctuated a bit, but it generally stays above 1.
And that's good.
That's considered healthy. It suggests they're managing their working capital well and have enough breathing room to meet those short-term needs.
Okay, that's good to hear. But remember, everyone, financial statements are only part of the story.
Exactly. We can't forget about the bigger picture.
Industry dynamics, competitive pressures.
And, of course, those risks we talked about earlier.
Right. Risks. Let's dig into those a little deeper. Deepak Builders has been pretty open about them in their prospectus, but it's important to really understand how they could impact their business and ultimately our investments.
Absolutely. So let's start with that big one, the revenue concentration. That heavy reliance on a few key clients, particularly those government entities.
If they lose a big contract or the government changes its priorities,
it could have a major impact on their bottom line. Imagine if a major project got delayed or even canceled.
Yeah, not good. So diversification is key. Spreading out the revenue stream a bit.
Exactly.
Now, what about their dependence on those government contracts? What happens if the government decides to, tighten the purse strings and cut back on infrastructure spending?
That's another big risk. Government projects can be unpredictable. Delays, bureaucratic hurdles, even cancellations. All of that can impact their project pipeline and their profitability. And with their track record so heavily weighted towards government projects,
that risk gets amplified.
Exactly.
Okay, so we've got government reliance, potential budget cuts, and what else?
Competition. The construction and infrastructure sector in India, it's a jungle out there.
I bet.
Tons of domestic and international players all fighting for the same projects. Deepak Builders will have to stay on their toes to keep that competitive edge.
Like Survival of the fittest.
Exactly.
So we've got competition, reliance on government contracts, always the risk of cost overruns. What else should investors be thinking about?
Well, don't forget about the fluctuating prices of raw materials. Steel, cement, sand. These are the building blocks of construction, and their prices can be volatile.
And they could really eat into their profit margins if they're not careful.
Exactly. Effective cost management is crucial. And then there's the regulatory environment.
Ah, yes. Regulations.
Mhm.
Always a headache.
The construction industry is heavily regulated. Building codes, environmental regulations, labor laws, all of
Yeah.
these can change.
And those changes can definitely impact their operations and their costs.
Right. They've got to stay adaptable.
Okay, so adaptable, efficient. And what about those key personnel we talked about? What if something happened to, the managing director?
That's a risk they've acknowledged in their prospectus. They rely heavily on their key people, especially the managing director. Succession planning and developing talent, it's crucial for any company, but especially for one like this.
Okay, so we've covered a lot of ground, explored their financials, dissected those risk factors. Now, the million-dollar question. Is Deepak Builders fairly valued?
Valuation, it's a complex game,
Right.
but it's the key to figuring out if you're getting a good deal or overpaying.
So how do we figure that out?
Well, we've got some metrics we can use,
Like,
like the price to earnings ratio or PE ratio,
yeah.
the price to book ratio or PB ratio,
Yeah.
and the enterprise value to EBITDA or EV/EBITDA.
Okay, break it down for us. What are these ratios telling us?
Well, the PE ratio, it compares their share price to their earnings per share, tells us how much investors are willing to pay for every rupee of profit.
So a high PE ratio means?
Could mean investors are optimistic about their future growth, but it could also mean they're overvalued.
Okay, what about the PB ratio?
That one compares their market value to their book value, so basically their assets minus their liabilities.
So low PB.
Could mean undervalued, high PB, maybe overvalued. It's all about finding that sweet spot.
Not too hot, not too cold. And what about that last one, the EV/EBITDA?
That one's a bit more comprehensive. It looks at their market value and their debt to give us a clearer picture of their overall valuation compared to their earnings.
So we've got our PE, our PB, and our EV/EBITDA. What are we going to do with all these numbers?
We'll analyze them, compare them to industry benchmarks and their competitors. We'll see if their valuation makes sense based on their financials, their growth prospects, and the overall market.
Sounds like we have our work cut out for us. But before we get lost in spreadsheets, let's take a step back and talk about their ownership structure. Remember, those promoters hold a pretty big chunk of the company. How's the IPO going to change that?
Well, it will definitely shift the balance a bit. They'll be offering a portion of their shares to the public, diluting their ownership slightly.
Right, because bringing in those new shareholders can sometimes complicate things.
Exactly. We'll get into the specifics of those percentages later, but it's important to understand how this change could affect decision-making within the company.
Absolutely. And speaking of potential complications, let's circle back to those related party transactions.
Yes. Always a point of interest for investors.
So just to recap, those are the dealings between the company and, well, anyone connected to it, promoters, family members.
Right. And those always need a closer look because there's always the possibility they could benefit those connected to the company, maybe at the expense of other shareholders.
So what kind of transactions are we talking about here? Anything that, sets off alarm bells?
There are a few that stand out. Lease agreements for office space owned by the promoters, business acquisitions from companies they previously owned, even loans they provided to the company. It's all laid out in the prospectus, but it's up to us to scrutinize those details, make sure everything is above board.
Okay, so looks like we've got our work cut out for us. We need to analyze those related party transactions, make sure everything smells right, and then dive back into those valuation metrics to see if Deepak Builders is priced fairly. It sounds like a busy part 3 coming up.
It's going to be a thrilling conclusion to our deep dive. We'll see if this IPO is a golden opportunity or a potential investment trap.
All right, so we're back for the final part of our deep dive into the Deepak Builders IPO. Last time we were talking about those related party transactions. Those always raise eyebrows, don't they?
Yeah, those dealings between the company and anyone close to it, Promoters, family members, always worth a closer look.
Definitely. So let's dive into what Deepak Builders has laid out in their prospectus. What kind of transactions are we talking about?
Well, one that stands out is the lease agreement for their corporate office. Turns out the building is actually owned by, you guessed it, Deepak Kumar Sehgal himself.
Wait, so the managing director owns the office building? That sounds a little convenient. What are the terms of the lease? Is he giving himself a sweetheart deal?
That's the first thing I thought of, too. But the prospectus says the lease terms are arm's length, comparable to market rates.
So it seems okay, at least on the surface, but still something for investors to, really look into. What other related party transactions did they disclose?
There's also the acquisition of the business. It was originally a partnership firm, owned, of course, by the promoters. Again, they say the transactions were at fair market value, approved by the board.
Well, that's good. But remember, everyone, transparency is key. Do your own due diligence. Don't just take the company's word for it.
Couldn't agree more. Always a good idea to double check. Now let's shift gears back to valuation. We've analyzed the financials, looked at competitors, but how do we know if the price is right?
Yeah, at the end of the day, we want to make sure we're getting a good deal.
Exactly. So let's start with the price to earnings ratio, the PE ratio.
Which basically tells us.
How much investors are willing to pay for each rupee of profit the company makes.
And are they asking for a premium?
Actually, their target PE ratio is pretty much in line with the industry average. They're not trying to, present themselves as some high-growth, super expensive stock.
Okay, so playing it safe, aiming for a reasonable price. What about the price-to-book ratio? How does that look?
That's also within the range of their competitors. So, further evidence that they're not overvalued. Remember, that PD ratio compares market value to book value. A ratio close to 1 means the market value is pretty close to what their assets are actually worth.
Makes sense. So far, so good. No red flags on the valuation front. But we got to remember, there's more to it than just ratios, right?
Oh, absolutely. Got to consider their growth potential, the overall market. If investors are really excited about Deepak Builders' future, they might be willing to pay a premium. And the construction and infrastructure sector in India, it's booming. There's tons of room for growth.
India is definitely building, and companies like Deepak Builders are right in the middle of it all. But as always, folks, do your homework, weigh the risks and the rewards, make sure you're comfortable with everything before you invest.
Couldn't agree more. Informed decisions are the best decisions.
All right, so for those ready to take the plunge, what's the IPO timeline? When can they get in on the action?
The key dates are all in the prospectus. The anchor investor bidding date is 1 working day before the offer opening date. Then, of course, we've got the offer opening and closing dates, the share allotment, and drumroll, the listing date. That's when Deepak Builders officially hits the stock exchange.
Time to mark those calendars. But before we wrap up, any final thoughts? Anything else investors should keep in mind?
Well, I did find one thing interesting. The prospectus mentions their plans to adopt green building technologies.
Well, that's a good point.
Could give them a competitive edge, Sustainability is a big deal these days.
Definitely. Could even attract a whole new type of investor. Something to think about. Well, there you have it, folks. Our deep dive into the Deepak Builders and Engineers India Limited IPO.
We've covered it all. Their business model, financials, those risk factors, even those related party transactions.
We've given you the tools. Now it's time to put them to work. Do your research, analyze the information, and make the best decision for your own investment journey.
Happy investing, everyone.